Welcome to Compound Insights, a podcast by CFA Society New York. I'm your host, Rob Rowan. Today we're talking to an innovative founder of a very interesting company in the data sector, Christina Chi. She is the CEO of Data Bento, an institutional market data provider. She formerly founded Dome Yard LP, a hedge fund focused on high-frequency trading that traded up to $7.1 billion of USD per day. Christina is a member of the MIT Corporation Development Committee. She earned a Bachelor of Science in Management Science from MIT in 2013 and became a CAIA charter holder in 2015. So, Christina, welcome to the podcast.
Thank you for having me, Rob.
The data market is going through massive changes right now. APIs are getting better. Speed is supersonic. The cloud reconfigured delivery and usage. And your firm threw out the old pricing model. So, as one of the innovators in the sector, where do you think the market data quality and delivery are headed next?
Thanks. It's a really great question. One thing we've noticed is even like 4 or 5 years ago, it used to be really difficult to access super granular data, like the kind of data that, the best high frequency traders out there get access to, or like a big institution would have access to. But if you were a startup, if you were even an individual, you wouldn't be able to get access to, they call it level 3 order book data, for example. And there's other examples of different types of data as well. Alternative data, fundamental data even was difficult to access. There's a lot of folks who even today have trouble accessing things like SEC filings, which are publicly available, but difficult to access under like a single API, for example. So there's, pieces of data like that today, because of this wave of new companies in the industry, us as well as many other startups out there, we've, I think, collectively lowered that barrier to entry for not just, of course, institutions that are going out there and getting more data, but also for startups, for individuals, and for anyone else out there that just needs a piece of data. One of the other things we noticed that has helped with Data Bento and has been just a big part of how we've grown is also making sure that data can be customized. Meaning, look, not everyone wants to buy every piece of every single US equities data out there for since the 1900s. Right? Like not everyone needs and that's a lot of data, by the way. If you think about it, that's, I don't even know how to quantify that anymore. I mean, for us, like we have petabytes of data that we're storing like every week now. It's a lot of data, right? That's coming in. Imagine if you want data from back then, right? And it's like not everyone wants that. One thing we've realized is, we see a lot of use cases where someone's like, hey, I want to analyze this one stock from 2017 to 2018 because of an event that happened, right? It's like a specific use case, and they want to be able to download that data on maybe on their computer, or access it through API, just through a laptop. They don't want to have to, traditionally, by the way, if you wanted to get this kind of data, right, that's especially if it's more granular, you had to set up infrastructure, you had to co-locate, you had to have interconnects or cross connects, right? And that it's a lot of work, but also it required almost like this hardware knowledge, and you had to hire people and get it all set up, and that's just annoying, right? Today it's like we have students using Data Bento from their from their bedroom in their dorm. So it's like totally opposite situation. People building their own hedge funds from working from home with our data, without having to go get that dedicated connectivity if they don't want to. Of course, by the way, we do offer connectivity services too, and that's another thing we noticed is some of our customers still want that, and that's only because the biggest reason is like they want a more accurate data, better latency, and maybe accessing a lot of data, especially options data is quite large for a data set. So for those situations, yeah, if they're looking for a lot of data, then yes, you need connectivity. But then the nice part is like for those who don't, right, for the rest of us, like I think people still deserve to deserve access to that data. Especially for specific use cases. So the key here was like, let's make it customizable. So if you want 5 days of this stock in this particular format, it could be a CSV file, it could be via API, access through Python or whatever language, C++, Rust, etc. If you want the compression a certain way, the delivery mechanism a certain way, right? We do everything from end to end. And I think that's really important, not just for us, but I think for other startups out there as well, thinking about the entire user journey and like what other services are they looking for. But yeah, I think a big part of it was just thinking about how can we look, data's an old industry, right? We're the new kids on the block very much. And so a big part of it was thinking about how can we, innovate and, continue to do something good for this industry, and establish a place here, right, in this space that is very much, new to, I mean, not really new to us in that we've been a customer and end user of data for many years. But from that perspective, how can we leverage that perspective to our advantage, and also to help other users out there to solve their problems?
Okay, that's interesting. And what will it take for the market's infrastructure to support the next generation of data processing?
I think because recently there's been this AI and in general a tech boom in the past decade or so, it's what's interesting is we're seeing a lot of these, especially larger tech firms that are adopting a lot more open source and they're creating a lot more open source tools and just basically, facilitating this open source community. And actually, that's a really big part of now it's becoming a big part of the financial community. And I think that recently, for Data Bento, even right, like we have an open source library, Python, like a C++, et cetera. And a lot of other startups that are innovating the space, they're all adopting open source. But for better or worse, the reality is that finance tends to be slower than tech in adopting a lot of technologies, whether it's the cloud, right, which tech has adopted a while back, and finance is still trying to. A lot of big financial firms are, migrating to the cloud, right? And and same with open source. I feel like it's still just the very beginning for us in finance to adopt open source and to see the real benefits of it. I think it's actually incredible. I wish that more financial firms would start to integrate and provide support for open source standards for proprietary software that has an open source model. There's a lot of great examples like Polar's Fast API Temporal QuestDB, like a lot of really cool and exciting open source tools out there, by the way, that we use that other people are using. And so yeah, I think that's one of the big infrastructure things that we're starting to see. And then of course the obvious one is just cloud and hybrid solutions, not just everyone migrating to there's three choices now, AWS and it's not like the three obvious kind of giants, right? Which yes, they're really important to this industry, but it's also the smaller firms, the firms that are offering, their own private clouds or hybrid solutions that are in between cloud and on-prem that are also, they're catered to the financial industry that are helping us out here in this space that is slow to adopt to the cloud. And that big reason why, cloud is slower, high frequency trading firms hate that. I get it. I used to run a firm. I totally get like the objections to moving in the cloud. And plus, like, AWS, when they go down, which they do go down, right? And we'll a lot of times we'll be like, oh, well, we can't work anymore, right? And so just being overly dependent on a single company and having your infrastructure there can be very risky. So I totally understand the risks involved. But at the same time, it is a potential solution out there to the risks and the limitations that on-prem has as well. So I think those are the main things. We're still trying to, like, most of our infra, of course, is co-located, which is on-prem with all these different exchanges. But and then we talk to the exchanges and they're like, oh, we're trying to migrate to the cloud. So maybe if things go well 10 years from now, a lot of the exchanges will be in the cloud. And then it'll be even easier. Hopefully we won't have to, I don't know, co-locate, and who knows what that's going to look like 10 years from now. But yeah, that's another just exciting direction that I hope that the industry will continue to innovate in.
Oh, I never really thought about the impact on co-location. That's really interesting. And by the way, if anyone is working at one of those investment management firms that hasn't really innovated into this, I think it's perfectly fine for you to take your personal computer and check out AWS. It has a lot of features, and my mind was blown the first time I looked at those things. And it's free. Just get some data, scrape it from someplace, drop it in there. It's really fun. If you were talking to a younger person with a background similar to yours, what subsector would you suggest to her?
Good question. First, in terms of suggestions, I'd like to preface by saying that there's no such thing as a single career path for everyone. And it's like one of those things where, starting from about 10 years ago up until even today, I think a lot of parents are like, major studying computer science. They're telling their kids, right, to study computer science. And then now, there's like this overflow. There's too many CS students. And it's actually more difficult than ever to get an entry level job. Of course, higher levels is a little bit easier, but entry level is in particular, even for us, as an employer, by the way, like, and I feel terrible about this, we're a no-name data provider, like outside of our industry, no one's ever heard of us. And we post these job openings, like, we have a marketing internship and we have a software engineering internship. And the software internship, we get like 5,000 resumes in a week. I think the worst was 20,000, in January, like one January, we got 20,000 just randomly, and it wasn't even after posted, just some random week after the holidays, everyone's back to work. It's just stressful because I'm like, we're a company of what, we have less than 30 employees, and we can't even, one is we can't process the resumes, by the way. We don't believe in using AI to process resumes either, because a lot of our employees would never have been chosen by an AI. And so it just creates this dilemma, for us, but also we try to make the job description very specific, by the way. We're like, this is not a job. We're not going to pay you a ton of, we don't pay like a high frequency trading firm, right? Like this is not the kind of, if you want to seek that quant career, like go for quant, like don't apply to us. And then we still get those resumes. I don't know if people are reading the job description or not. People still apply. Um, but also, for marketing, like it's normal, right? Our marketing internship, we get like 10 to 20 resumes a week. And like that's kind of how it used to be and how it should be, I feel like. But so we've noticed that oversaturation. I think the other advice I would give is like, it's like live the life that you want, not the life that others expect of you, right? Even though right now computer science is a hot thing to do, it really isn't anymore. You're starting to notice, right? It's just more and more difficult to get a job. In fact, you might have an easier chance of getting a job in marketing as a CS student than, because it's just statistically like just so much more difficult. So I mentioned that, but also like, of course, there's other areas right now that are starting to grow, that are getting exciting. We're noticing a lot of firms that are hiring for some derivatives teams, trading like futures and options, like going into different areas. So that's been really exciting. We've seen some firms that are expanding into Europe, into European markets, and into certain parts of Asia as well. And I think that's really awesome. Like there's a lot of areas for growth, but then again, it's like by the time, if I'm talking to a student right now, by the time you graduate, that's going to change, right? Like stuff happens, but like this world changes so fast. I remember like what was it, 7 or 8 years ago, it was all about ESG. Like every other panel was on ESG, and then it was like 6 years ago, it was all about crypto and Bitcoin. Like all the big firms had started blockchain teams, and then, so it's like these things happen and they come in, not that they're coming and going. Of course, ESG is still around, blockchain's still around, but just saying that back then, there was a period of time when everyone was hiring that. And then now it's like, it's harder to find an ESG specific job, it's like by the time, the industry just changes so fast that that's the other thing, is just being fluid and being flexible in what you do. Like, did I ever imagine going into even like high frequency trading many years ago? Absolutely not. No kid ever, maybe these days, maybe, but for me, like no kid ever. Now I grew up in Utah, I live in the middle of nowhere, like never would have imagined, being in high frequency or in data. Like why would I ever want to be in data? It's not a, where for me, I'm like a sexy industry is like, I don't know, selling cupcakes in a bakery, like there's a certain other type of lifestyle, right? That unfortunately, for better or worse, I don't have. So it's like thinking about that, and like, what really drives you might be different from what drives someone else. And just like, I would say just going for something, and even if it's not a sexy industry, like you make it work, right? Like, so that's my biggest advice. Yeah.
Yeah, although bakeries are notoriously prone to going out of business, not earning a dime on their way there.
Yeah,
So I
exactly.
would I would think about that.
True.
Yeah, and it's what type of things do you think that young people should be preparing themselves for to be an entrepreneur in this sector?
Oh man, to an entrepreneur, you know, the biggest thing for me has been just normalizing rejection. And I mean that very seriously. Like I get rejected every day by investors, by even today as a second time founder, having just raised a round of funding, right? Like getting rejected by investors all the time, by customers all the time, by customers who don't understand what we're doing, and they're like, oh, we're gonna go use Yahoo Finance instead, like you get all kinds of customers with misconceptions of, we're an institutional data product, right? And we actually sell to companies like Yahoo Finance that are displaying data on their websites and stuff. So it's like, like that, where there's customers that have misconceptions that will reject us, or for valid reasons as well. We don't have the data sets that they're looking for. We simply don't have the history, and that's okay. But just meaning that, like, for me, I remember when I was in school, the first time I applied to an internship, they rejected me in less than 24 hours, and I cried. Remember, like, I cried. I went to my roommates. I was like, oh my gosh, like this hurts. Like rejection. I've never been rejected before. It just sucks. Cause like when I was a kid, you're not used to that. Um, and now, 100 rejections later, and you're like, oh, okay, this is life, right? Like that's one thing you realize, is if you're not getting rejected, you're not, for us as a founders, right, you're not doing enough, because you're a big part of your job is the daily rejections by society, honestly, like by everyone. But then it's like, of course, taking feedback, and if you get a few yeses, right, like those kind of yeses take you a long way, and can get you to where you are. And so I think that's a big piece of advice, is just as a founder, you have to get used to that. The other thing is like, people don't realize, like, we talk about all the glorious stuff, like, we just announced our fundraise, and it's a really cool thing. But behind that fundraise was so many tears. I literally was crying so much behind that process. And I know this is a professional podcast, but I'm going to share this anyway. Yeah. Um, I mean, I was crying because, we had some investors that were really excited to invest in us, and they were, they like send us the legal paperwork. They already committed. They're like ready. What's the wire instructions? At the very last second, they pulled the rug from underneath us. And that's happened to, it happens not just me, it's happened to many other people where suddenly, and the rug gets pulled for reasons unrelated to you. They're like, hey, we're pivoting our business. And I'm like, what? And hey, we're pivoting our business, or we realize we don't have the dry powder and they don't have the cash on hand for us anymore. Didn't do the math behind the scenes. I'm like, wow. And that kind of stuff happens, and you just have to, adapt to last minute, like the chaos of that. And I remember just the rug pulled underneath us on a Saturday night at 2 a.m. Like that's the kind of situation where you have to, unfortunately, for better or worse, right? And this is why this is not for everyone, because the work-life balance, it's not just like a 9 to 5 where you go home at 5 and you can just, decompress and do yoga. I don't know, go do your hobbies, your dog, whatever. For us, it's like Saturday at 2 a.m. I'm scrambling to, I had just rejected a bunch of investors last week because our round was oversubscribed. Now I have to embarrassingly call them and be like, I'm sorry, guys, are you still interested? And they're like, no, we're not, and I'm like, oh my gosh, right. So stuff like that happens. And I think that's and there's so many other stories I could just tell you about, just how the environment's also very fickle of an environment, I realize. So some investors will come to us and they'll say, hey, we won't sign, we were interested, but we're not going to sign or write a check until you've raised all, for us, it was all 10 million of your round, right? You can't do, they won't let us do a rolling close. They won't let us, anything in the middle. And so it's like it's either 10 million or bust. And then they're like, we want to be the last to sign. So can we see everyone else's signatures first? And I'm like, geez, like if everyone said that, which, some people will do that. If multiple people say that, you all can be the last. At some point, someone's got to cave first and sign. It's chicken and egg. They're creating chicken and egg problems for me. And I understand why. Look, from their perspective, right? So many of their rounds have fallen through. For other startups and other VCs, it's happened, right? And so I understand that, but it definitely makes this fundraising environment, and also just founder life in general, this is just tip of the iceberg of all of the kind of nuances, and kind of, it really is blood, sweat, and tears, like behind the scenes, that happens. And the key here is just like, humans are so resilient. That's the other thing, is like, I don't know, like I feel like I'm very resilient. I was crying eyes out, like a few weeks ago, because of the fundraising. And then we put together the round, and I'm able to just kind of move on and be like, let's use this as a moment to celebrate. I keep forgetting, like, we should be celebrating, and not crying about the crying happy tears, hopefully. But yeah, so that's what it's like realistically behind the scenes.
Well, yeah, that's that resilience of human beings and people who do it is sometimes called everyday glory, and you have embodied that. It's just magnificent to see.
It's tough, but there's a psychological thing called the hedonic treadmill, which I should also mention, right? Which is that we all have a baseline level of happiness, which honestly is not very happy, right? And that's why humans seek, social validation. And that's why I seek social validation, honestly, right? Like, you post on social media, everyone likes it, or maybe you buy a new watch or a new phone, right? And you have a temporary moment of really extreme happiness or something, and because you're, it's like excited. But then, after 24 hours, it wears off, right? So it's the on a treadmill, you feel like you have to keep climbing, keep, doing something. And one thing is, it's important to actually recognize that and be like, I don't need that. I don't need to constantly be, for me, unfortunately, it's part of my job now. I have to post product announcements and, updates. It gets us more customers, honestly. But for some people, it's like, you don't need to necessarily always be, doing that. And you can feel fulfilled in gratitude, without having the next shiny object every 24 hours. But yeah, that's kind of the feeling, as an entrepreneur, as well, as like, you always feel tempted to, like, pursue the next shiny thing and chase after those opportunities. Yeah.
Yes, it's being a founder is not a great lifestyle. And some of the tension you're talking about there is built into the market. So the problem that you isolated with VCs is also borne out in the difficulty that they have in doing due diligence. That's why they want to be last. They want to see the others' due diligence. They want to see what everyone else is doing. So there's a lot of noise in the market. And if you look at really closely, especially in the VC and angel investing area, there's an awful lot of friction.
Yeah, I don't know if anyone knows Sally Krawcheck. She was the former, I think her title was president of Bank of America, and then she started Elvis, started like her own company, right? And she was fundraising for her company after being, the the what is it, most senior level woman in finance, essentially, in pretty much in history. And when she was fundraising, it's funny because she was telling me the same thing, by the way. When she was fundraising, the first question that these VCs would ask is, who else is investing? And she was like, "Wait, shouldn't you be doing due diligence on me, right, and our product?" And they're like, "No, no, no, they wanna see the FOMO, they wanna feel that fear of missing out, from the other investors. It's about the bandwagon." And then the other question they would ask her is about her qualifications, like, "What makes you qualified, start this financial company," right? And hello, like, she's the most qualified person on paper in this entire industry. And it just, I could relate so much of that. Not saying I'm qualified or anything, but that investors would ask a lot of those types of questions, and you feel like you're constantly being grilled, and you have to know how to answer that. You have to know how to be patient and explain. And really, for me, I like to show, not tell. So, like, what makes Data Bento different? Okay, I'll share my screen and just show you our actual product, right? And then they're like, oh, I get it, right? Instead of telling you that we're different, I think, yeah, really showing it helps a lot. So, but yeah, like, definitely can feel those same frustrations as even some of the biggest leaders in our industry.
Well, it's funny you mentioned that because Sally was the honoree of our annual celebration 3 years ago, and she told a story very similar to that.
Yeah, oh, really? That's awesome. Yeah, just it's interesting how, and it's not just women, of course women do face that a little bit more. It's statistically, by the way, I would say that that's actually a statistic. We use a tool called DocSend to send our pitch deck, and DocSend compiles data on all of their customers on this, and they notice if there's like a woman founder on the team, venture capitalists spend a lot more time on the team page than if there's a male team. And so there's a lot more scrutiny of women founders, for better or worse, right? So there is data on that women are treated differently in the fundraising process. Of course, we get 2% of funding or something. It's not a lot. So there is a little bit of that, but also I think it does apply to men. It applies to immigrants, people with an accent, people who speak, right? It's like everyone faces stigma. And so I think overall, like, it's a struggle that all of us are facing in unique different ways, or age wise too. If you're too old, if you're too young, like everyone faces that too. So yeah.
It's funny, the due diligence process. I used to do some diligence work for wealthy individuals. I thought it was very funny that we didn't like things that were outside of the norm, but what we were looking for was someone who thinks and sees outside of the norm. Yeah, so I just like, guys, we're looking at the wrong thing. Well, Christina, thank you for sharing all these thoughts, and thank you also for being so down to earth and frank with everyone about the difficulties of this, and keep your everyday glory going. And thank you all for listening to this podcast. If you're interested in some of the things that Christina was just saying about the gender issues in the investment management industry, please do check out an event we have coming up later in November called Women in Finance, and it's available on our website right now. You can sign up right now for it. It's a little bit focused on mentoring, but you might get some things out of it about management and other thoughts about how to affect change in your firms. Until next time, I'm Rob Rowan, and this has been Compound Insights.